This is the BrainChip Quarterly Investor Podcast. Join us for answers to some of the most frequently asked questions put forward by BrainChip shareholders each quarter. This podcast is for both existing investors and potential future investors who are interested in the development of AI.
Hello and welcome to this special podcast for BrainChip investors. My name is Tony Dawe, Director of Global Investor Relations, and the focus is on remuneration policy today. Joining me is BrainChip's Non-Executive Director, Pia Turcinov, and Jelena Tasker from global remuneration consulting firm, Korn Ferry. Hi, Pia. Hi, Jelena.
Hi, Tony.
Hi there.
Pia, as chair of the Remuneration and Nomination Committee, you're responsible to the board for the development of remuneration strategy and policies affecting directors and executives of BrainChip. Over your time as a director at BrainChip, how have these policies evolved, and how does the latest rounds of policy changes reflect the work of your committee?
Thanks, Tony. Look, I thought it might be worthwhile just to kick off and contextualise for our listeners a little bit about the work that the committee is responsible for, because it does play a pivotal role in supporting the board on all matters relating to remuneration and board appointments. So the Rem and Nom Committee oversees the compensation arrangements for our CEO, our senior execs and our non-exec directors. It also manages the equity awards through the company's short-term incentive and our long-term incentive plan. And we work heavily on the development of our annual remuneration report, which our shareholders would have seen released just recently. We're also responsible for identifying and recommending candidates with the appropriate skills and experience for board vacancies. So the focus there is always on strong governance and effective leadership. But ultimately, and I think for the purposes of our podcast today, the committee very much helps the company maintain what we consider remuneration practices that attract and retain high-performing individuals that we need to drive the long-term success of BrainChip. I did join the board in January 2022 and was appointed chair of the Rem-Nom committee shortly afterwards. And since then, we've been very deliberate about ensuring our remuneration framework evolves in step with BrainChip's growth and what we're seeing as the maturity of the organisation. Over that 3 years, we've made substantial progress in refining and strengthening the company's remuneration philosophy, our guiding principles and our overall practices. We've introduced what I believe is significant rigour and discipline, and our shareholders would have seen our documented policies.
Thanks, Pia. I think that's a great sort of setup to get the conversation started. So you've referred to the guiding principles and the philosophies. Would you like to expand a little bit on what those core philosophies and principles are?
Sure. Look, I think first and foremost, the guiding principle is very much ensuring alignment with our shareholders' interests by incorporating equity into our remuneration structure. We believe that this really encourages a long-term sustainable approach to decision-making and to performance, and it also fosters careful risk management, which is important. And lastly, it really helps what we believe is the retention of that talent that we need. We need to reward sustained performance and that commitment to the long-term success. We're also very much committed to undertaking global compensation benchmarking exercises, and that's why we've got Jelena from Korn Ferry here. That was a great exercise, and we can unpack that a little bit later. But I just want to say that we found the results of that report extraordinarily illuminating and very useful in shaping our REM policy going forward. The other tenets are performance-based salary packaging, where we really have focused in on implementing performance-based REM, which combines both long-term and short-term incentive plans. And we link them to both the individual, the departmental, and the overall company targets. So we believe that's quite a holistic approach. Retention of talent is obviously key. We need to retain highly talented individuals, which are critical. And then lastly, also clearly separating the remuneration structure of our executives and our non-executive directors. Again, The importance there is because we need to preserve the independence and the objectivity of our non-exec directors when it comes to overseeing the company's performance. And that's where we're very mindful about separating these two REM baskets, so to speak, avoiding conflicts of interest. We want to ensure clarity and fairness, but we also are very much committed to that strong corporate governance that enables us to effectively hold our execs accountable, which ultimately is in the best interests of our shareholders. Another point I'd like to share with our listeners in the lead up to our 2025 AGM is that in addition to reviewing and updating our share ownership guidelines, each of our non-executive directors have resolved to defer the annual issuance of securities to the NEDs under BrainChip's equity plan. That means that the issuance of the earmarked 2025 securities for NEDs will be subject to shareholder approval at the 2026 AGM. And then if approved at that AGM, those securities for 2025 will be issued in 2026. And I just want to provide a bit of colour to that decision because it really is in response to shareholder feedback. And we see it as a sign of the board's strong confidence in the company's long-term outlook. As always, our approach remains centred on driving long-term value for our shareholders, but we need to support the BrainChip team to deliver on our strategic growth plans. I would say that I believe our current remuneration policies, along with what we are now seeing as very transparent disclosures of key performance metrics, really demonstrates our commitment to incorporating the feedback we're getting from shareholders and from our external stakeholders. But again, I would say we do recognise that this is an evolving space, and we are very much committed to refining our approach as we continue to execute on BrainChip's commercial strategy.
Thanks, Pia. That's a great answer. I am part of that feedback with our shareholders, so I'm well aware of the commentary that comes through from our shareholders and how that is then fed into the board. So thanks for that answer. Internally, we recognise that remuneration is one of several ways to attract and retain talent to our company. Can you provide our shareholders with a sense of what type of competitive environment BrainChip operates in with regards to both the attraction and the retention of talented staff and the role that remuneration plays in that process?
Thanks, Tony. Look, that's a great question, and it's absolutely critical to the way we operate. Our business is in a highly competitive environment when it comes to attracting and retaining talent. It will be no surprise to our listeners that we are experiencing a global surge in demand for professionals with advanced tech and particularly AI expertise. And that's driven by the widespread integration of AI across basically every industry. And the majority of BrainChip's talent pool is really based in the US. And we know that over 25% of tech-related job listings specifically require AI skills. And on top of that, we're seeing significant market influence from companies such as NVIDIA, AWS, and Google, and that's really substantially affecting the global availability of AI talent. The aggressive talent acquisition strategies that these companies deploy include highly competitive salaries, substantial equity compensation packages, and they also offer really strong brand appeal. So the concentration of talent within these major companies presents a real challenge for smaller and more specialized companies like BrainChip. And it means that we have to be creative. We have to remain on the front foot when it comes to attracting and retaining those highly qualified tech and AI professionals that are absolutely core to our success. So the other aspect is, of course, they set elevated benchmarks for remuneration. So us being able to compete with those high salaries, the equity compensation packages is a constant challenge for us. But we believe that, fundamentally, we want to attract and retain the professionals who drive our technological advancements. Yeah? So that has to be a key operational priority for us. And we really try and emphasize the potential growth and upside for our employees. And that's where the equity share plans come into play and are pivotal in making it a success. And the other thing I would say is, all BrainChip employees, whether it's executives, the team members and directors, are shareholders of the company. And that share ownership structure, I believe, really fosters that alignment with our shareholders' interests. And it does reinforce that collective commitment that we all have for a long-term growth and the success of BrainChip.
Thanks, Pia. As part of the latest round of remuneration policy changes, BrainChip engaged independent global remuneration consulting firm Korn Ferry to conduct an arm's-length review of our remuneration policies and then benchmark them against our peers both in Australia and in the United States. Could you talk to some of the key findings of the Korn Ferry report? And then, if you'd like to, introduce our special guest, Jelena Tasker from Korn Ferry, to discuss their work in more detail.
Thank you, Tony. I'd be delighted to. Let me just start by taking a step back and explaining to our shareholders and listeners why we engaged Korn Ferry in the first place. And really the brief to Korn Ferry was to ensure that BrainChip is offering a competitive, well-aligned and what we would consider a thoughtful compensation program. We have received shareholder feedback over the years, and we very much as a board wanted to benchmark our current executive and director compensation against the sector, size and performance-specific reputable third-party surveys. So we were very conscious and deliberate about the data that we wanted Korn Ferry to unpack. We needed to ensure that our current framework is thoroughly reviewed, but also we wanted it refined in time for the release of our 2024 annual report, which would have been released on the ASX a few weeks ago. But I believe that the content of our REM report has allowed us to clearly demonstrate that alignment between our strategic objectives and also respond effectively to shareholders' expectations, as well as setting that contemporary compensation package, because this is an evolving space. This is not a static space, and year in, year out, we're going to have to review this. So the engagement with Korn Ferry was very much asked to conduct a review and provide advice regarding our executive compensation plan, as well as benchmarking and comparing BrainChip's remuneration against our peers both in Australia and the US. A key challenge is that although we're listed on the ASX, our talent is to a large part drawn from the US. And as such, we really did have to have a clear understanding of both the US and Australian pay practices. And as our shareholders know, we have a board that is also divided across the two continents. We have 3 of our NEDs based in Australia, 2 of our NEDs in the US, and our exec director and CEO is also US based. So we need to have a compensation program that considers geographically appropriate pay practices. And that's where the report that Korn Ferry has provided us with has really been invaluable. And I will let Jelena unpack some of the work that they did do, but I'm very happy to say that the findings of the report to the board proved very illuminating and very valuable to the deliberations by the REM committee and the board. The benchmarking work, if I just had to summarize it for our listeners, confirmed that our remuneration is relatively in line with our peers in both markets, and that we are achieving what we believe is a balance of the compensation standards based in Australia with those in the US. We are heavily weighted towards performance-based outcomes, but we also utilise a retention component, which is probably more in line with US standards through the use of our time vesting RSUs. But to dive further into the benchmarking exercise, I'd like to hand over to Jelena Tasker. She is the client engagement partner that led the Korn Ferry team on this piece of work. And I do believe that our listeners will value hearing directly from you, Jelena, to share your thoughts on the report findings. Thank you.
Thank you, Pia. Thank you for having me here, guys. I do want to provide a little context as to where I sit within Korn Ferry universe. I operate as a partner within our executive pay and governance practice, which focuses on compensation matters in various sectors of PubCo realm. We work with small cap, mid cap, large cap companies, S&P 500 companies and Fortune 100 companies, both with management and compensation and remuneration committees. And our work is usually, all involving, and we have experience with on a global scale, and which proved to be very useful here. In particular, my client portfolio consists of high-tech companies. Most recently, most of my work sits with AI companies, so it does give me that perspective of how competitive the AI sector or talent is. With that being said, when I approached the committee to do this work, I did provide some anecdotal data or case studies as to what the differentials are between US and Australian market in terms of the pay. And the committee was very insistent on having the actual data. So the clear ask was not to just understand the differences between two markets being the US and Australia, but to understand the scale of difference in pay economies, right? Pay levels, pay structure, and also governance and regulatory practices. So it was very, holistic ask. So to clearly understand the differences without introducing the noise of differently benchmarking the two markets, we have actually established two peer groups using exactly the same methodology, which Pia has referenced. We use the size as a first parameters sector. We also use the performance profile, meaning that we went after companies that have similar growth, similar market cap, similar profitability profile as BrainChip. We have established mirror-like peer groups for the two geo regions, and we have also used survey data that is mirror-like for the two regions. So this again has given us a chance to observe the differences in pay practices between the two markets without feeling that the using different methodologies interfering with that. And what we have found is, yes, there is a difference between the two markets. And if we look at the CEO pay alone, the US market pays about 1.35x multiple of the Australian market. And the most notable difference is in the LTI component, which is 1.9x in the US market as compared to the Australian market. For other executives on aggregate, if we look at the differential, the US market pays 1.5x of the Australian market. And again, the most notable difference is again in the LTI component, which is 1.65x of Australian market. Once we were able to establish the two sides of the spectrum of this continuum, the key question was, where does BrainChip pay program sit within that continuum? And something that the committee was insistent on doing was to create a balanced competitive positioning between these two guideposts. And again, the biggest challenge here is that we're observing a significant gap in terms of the economics between two. So when you think about positioning yourself right in the middle, in order to be balanced, it automatically means that you will be paying a little bit more when compared to the Australian market and a little bit less than the US market. So what we had to do is, again, be very thoughtful and very planful with this decision-making process, and it was iterative. We considered maybe, leaning more to the US market on base, or should we lean more towards Australian market on base, or should we lean more on LTI one way or the other? And again, we have gone through several iterations until we got to that sweet spot. Again, that is very balanced. And one of the things that I found very rewarding and fascinating when working with this committee was the fact that anytime there was optical sense that we're leaning towards a more expensive market, which in this case is US, the committee was insistent on finding a way to counter that with a governance standard, such as, for example, share ownership guidelines that will say, okay, we are being a little more, economically rewarding when compared to the less expensive market, in this case, Australian market. But I want them to counter that by requiring our executives to have highest level of standard when it comes to share ownership guidelines. So that's one thing that we have provided. Also competitive practices. We used US standards for establishing share ownership guidelines, as those are very rigorous. We used S&P 500, actually, company standards, and those will be rolled out with this fiscal year program. When it comes to the board compensation, we did learn that, again, there is a differential between the two markets. One of the most substantial differences was presence of equity component in the US market versus Australian market, and not just presence of the US the equity component in the US pay packages, but that being the most economically driven component in the pay package. And so again, what we have done is provided that component, right, to create that alignment with shareholder interests, but that was countered with establishing a higher level of rigor in share ownership guidelines. So the committee has adopted calibrated share ownership guidelines for independent directors, from being 1 time the cash retainer to 5 times the cash retainer, which is substantially higher.
So, Jelena, after your comprehensive analysis, in summary, what feedback would you offer to proxy advisors and BrainChip shareholders when considering BrainChip's remuneration packages?
At the end of this great discussion and considerations, I would like to highlight that this process, this collaboration, was very enjoyable from the perspective of how much board has put energy into highlighting the rigor of the process, infusing the rigor in the process, infusing the planfulness, the discipline, not just in going after specific data set and understanding the markets, but understanding the governance standards in 2 completely different markets, as we talked about this previously, to regulatory standards, to making sure that shareholders are heard, not just, hey, let's check the box. All these made this collaboration, from my standpoint, very enjoyable. And also from disclosure standpoint, right? So you can see just me listing all these things. I had to come back and remind myself that there was also a disclosure. There was also a redesign of the program. And we also put some regulatory stuff in there. So there was just a lot that was done. And that is intended to demonstrate how much energy and desire there is from this board and the REMCO to showcase that we listen to shareholders. We do care how these programs touch, the touch and feel of these programs, how they land, and how they, what the value proposition of those programs is for our management. So net, I would say that I have a very high confidence that this is a solid program. It will continue to evolve. There is no perfect program out there. It will continue to evolve. And it will be beautiful to watch that process as this program continues to evolve.
Thanks, Jelena. I do appreciate the detail you've just provided, and hopefully that will give our investors a sense of the rigor and the thought that's gone into this benchmarking process, and how that informs the way our remuneration policies are developed and how we see them being enacted and put into place. Thank you. I'll switch back to Pia, if you don't mind. Pia, one of the questions that I think you and I both anticipate will probably come up at our AGM in May, and certainly is reflective of a broader connection between company performance and remuneration are questions surrounding the specific revenue targets that we have provided in the annual report in relation to our CEO's performance. Would you like to just give some colour to that decision to make those revenue targets public?
Sure, Tony. And I think, again, feeding onto Jelena's commentary, it is about transparency, it's about rigor, and it's about consistency. So simply put, we remain absolutely committed to enhancing the transparency where possible, particularly in relation to our REM practices, and we have listened to shareholder and market feedback. And to achieve this is why we've taken the step to clearly define and communicate the performance metrics. It's designed to demonstrate the alignment of the performance of our CEO with the strategic commercial goals of BrainChip, the priorities, and also our shareholders' expectations. So in short, the metric provides clear accountability. And I think importantly, that metric set by the committee and endorsed by the board reflects measurable individual, departmental, and company-wide targets. And ultimately, it's that transparency that goes beyond just the CEO. And our executives remain motivated and incentivized and to drive our continued growth and to deliver that long-term value to our shareholders. So it was a very deliberate decision, and we hope that the market acknowledges that and sees the benefits of us disclosing these metrics.
Well, performance-based remuneration and disclosing of specific targets for executive remuneration have been themes coming through in our engagement with proxy advisors over a number of years. As we run up to the 2025 AGM in May, what sort of engagement will we be planning with proxy advisors?
Look, we clearly recognise that proxy advisors play a hugely influential role in guiding institutional investors' voting decisions on the resolutions that we present at our annual general meetings. So given the potential impact of proxy advisors' voting recommendations on shareholder voting outcomes, we always take the view to actively engage with proxy advisors prior to the publication of their recommendations. We consider this a very proactive and open dialogue, which helps us address their questions and hopefully provides clarity on our governance practices that we are, very actively shaping and bolstering. And additionally, I think it also helps us to continue to refine our remuneration disclosure policies and practices, because we're getting a direct response and very valuable feedback from the proxy advisors. So look, this year will be no different. Again, we'll be engaging early and absolutely welcome feedback from the proxy advisors. And hopefully, we've got multiple communication channels at BrainChip, this podcast being one of them. That aims to provide that clarity on our remuneration approach, and hopefully will help the proxy advisors and our shareholders better understand, the rationale behind BrainChip's compensation framework and demonstrate our commitment to transparency and to good governance.
Thanks, Pia. And thank you, Jelena, for your participation in this special podcast and for sharing your insights with our investors on the development of these remuneration policies, the benchmarking process, the methodologies that you've employed in advising the board on our policies, and for coming onto this podcast today and helping explain all of this to our investors. On behalf of BrainChip, I hope you found this podcast informative and interesting. Thank you for your support and have a great day.
Thank you for listening to the BrainChip Quarterly Investor Podcast. Please remember to rate and review on your favorite podcast platform. You can always learn more at BrainChip.com.